If you've noticed, a common theme emerging from some of our recent sessions has been disruptive technology. And why just our sessions? New and emerging technology has become an increasingly integrated part of our lives in this past year. The question is, how do we benefit from it? Tan De Jin, Senior Equity Analyst from iFAST Financial Singapore, is here to tell us what lies ahead for the digital economy in 2021. Welcome, De Jin.
Hi, Deepali. Thanks for the introduction. So, good afternoon, everyone. My name is Jun. I'm a senior equity analyst here at iFAST Singapore, and today I will be sharing with you about the digital economy, the impact COVID-19 has had on it, and more importantly, the investment opportunities that we see over the next couple of years. So, without further ado, let's begin. So right now, the world as we know it is on the cusp of a new technological revolution known as the Fourth Industrial Revolution. So this marks a turning point in human history where the widespread use of digital technology such as the internet is blurring the lines between the physical and the digital world, forever changing the way we live, work, and interact with one another. But unlike the previous three industrial revolutions, the digital technologies today, they are evolving at such breakneck speeds that businesses and individuals alike are finding it hard to keep up with the changes at times. And those who fall behind run the risk of being rendered obsolete. The rapid digital transformations across all industries and sectors will bring about many new investment opportunities, particularly among companies that are able to adapt to the changes quickly. And as the world we live in becomes increasingly digitalized, the digital economy will become an integral part of every investor's portfolio. So what exactly is the digital economy? The digital economy can be defined as a massive web of interconnected stakeholders and supply chains covering all digital products and services that are enabled by the internet and other digital technologies. So while there is a lack of an industry classification system due to its complex nature, the digital economy can be broadly categorized into the following 8 categories, as you can see on the screen over here. So let's talk about some of them. So e-commerce, for instance, has fundamentally transformed the way people shop for physical goods, with e-commerce companies like Amazon and Alibaba in China having an outsized impact on the broader retail market. And as more people choose to shop online, brick and mortar retailers are forced to reinvent themselves to get ready for the digital era. So another segment of the digital economy is cloud services. So cloud services is one of the fastest growing segments, and this is where cloud service providers, they actually provide the hardware and the software that are needed to support the data storage, computing, and networking requirements of a business. And as more companies migrate a greater portion of their workloads onto the cloud computing industry is set to see explosive growth ahead. So let's talk about one more, that digital advertising. So because consumers are spending an increasing amount of time on the internet compared to traditional media, engaging with them is no longer the same as before. So for firms who are looking to advertise their products and services, digital advertising is almost always a necessity to maintain a strong online presence. So collectively, these 8 segments that you see over here, they make up, they are worth approximately 9.5 trillion US dollars today. And that's roughly 10% of the world's GDP. So if you were to think of the digital economy as a national economy, then the digital economy would be the 3rd largest in the world, only behind US and China. So taking a look at the changes in the world's largest companies across time will give us a sense of how quickly the digital economy has developed over the years. So compared to a decade ago, when only 2 of the top 5 companies are considered digital economy stocks, every single one of the top 5 companies that exist today, they belong to the digital economy. And looking ahead, we think that the digital economy still has plenty of room for further growth in spite of the disruption caused by COVID-19. So while we're on the topic of COVID-19, I think it's safe to say that COVID-19 has caused a lot of stress on our lives, but at the same time, it has also revealed the importance of digital readiness. So during this period, companies that have performed well, they are generally those that have an established digital presence, while those that don't typically do not. So COVID-19, it has had a disproportionate impact on various sectors of the economy, with some more badly affected than others. But in the case of the digital economy, we believe that COVID-19 is actually an unexpected catalyst, one that will likely produce a net positive impact in the long run. So the global health crisis, it has brought about many structural changes to the way we live and work, and with most countries implementing social distancing measures to stem the spread of the virus, physical in-person activities have gradually shifted online, and this has also driven up demand for digital services such as e-commerce, cloud computing, and even digital payments. So within the digital economy itself, the cloud services segment has been one of the biggest beneficiaries of the pandemic. The three largest cloud service providers in the world, which are Amazon, Microsoft, and Google, they have all reported significant growth in cloud revenue as companies invest heavily in digital infrastructure so that their employees can continue to work remotely during this period. And the positive impact of the heightened demand for cloud services has also spilled over to other segments of the tech sector, such as the semiconductor industry, for instance, where demand for data center chips has been growing rapidly. So besides cloud services, online consumption has also benefited from the pandemic. So take China, for instance, which endured one of the strictest lockdowns in the early days of the pandemic, has seen the sharpest rise in e-commerce sales since 2014, as online sales accounted for roughly 25.2% of the total retail sales in China over the first half of the year, which is nearly 5 percentage points higher than where it ended the year in 2019. And besides e-commerce, online consumption of services also saw an uptick across 2020. And in the latest quarterly update, Chinese food delivery giant Meituan Dianping, they revealed that the transaction volume for its food delivery segment actually surged to a record high of about 152 million renminbi. And that is approximately 35% higher than its previous record high of 112 billion set in 4Q19, which is just before the pandemic hit. And this is mainly due to the steady increase in the number of users and order volume as consumers begin to appreciate the convenience of food delivery services. The growing demand and popularity of food delivery services has also prompted many merchants to partner up with the company, as the company has onboarded nearly 500,000 new merchants over the first 9 months of 2020. So over here, these are just two of the many examples of how businesses have accelerated the adoption of digital technology in the wake of the pandemic. And as we head into the post-pandemic years, we foresee that this trend will continue as businesses make preparations for the next crisis and also to remain competitive in a digitalized world. So as a matter of fact, we are already beginning to experience some of the positive impact that the pandemic has on the digital economy, as the share price of OGIG, which is our recommended ETF for this sector, has more than doubled in 2020. So this is in stark contrast to the performance of broader equity markets such as the STI or even the S&P 500, for instance, which has delivered gains of only about 15% in 2020. And with that being said, investors who have held on to this ETF for the better part of 2020 would have likely made some decent profits already, and you may want to consider taking some profits off the table. However, we do caution against selling out completely. So the reason for this is that when it comes to portfolio construction, asset allocation, it should always reflect economic reality. And the reality is that going forward, internet companies will make up a larger part of the global economy as the world we live in becomes increasingly digitalized. And this is the fundamental reason why we recommend that investors include the digital economy as part of their core allocation when they are constructing their portfolios. So looking forward, even though valuations of several digital economy stocks may seem a little stretched at this point in time, we note that the long-term outlook of the digital economy remains robust, and the industry is expected to deliver earnings growth, supported by mega rising internet adoption rates and widespread digital disruption. So let's talk about some of these mega trends, starting with the rising internet adoption rates. So despite expanding at an exponential pace over in the recent years, global internet usage remains far from saturated. And the number of internet users worldwide currently represents about 60% of the total global population, which means that there is still a large number of people who do not have access to the internet. And across the world, it is for sure that there are vast differences in the maturity and the extent of internet services that are available in each region. So developed regions such as North America and Europe, for instance, are nearing saturation with penetration rates as high as 95%. However, the penetration rate in Asia remains relatively low compared to developed markets. So this is despite the fact that Asian economies, they have a combined population of exceeding 4 billion, which accounts for more than half the global population. And as internet penetration rate in Asia converges with developed markets, the digital economy is likely to see promising growth over the next few years, with internet companies being the main beneficiaries. Besides the rising internet adoption rates, another mega trend which we think will contribute to the growth of the digital economy is the widespread digital disruption. So digital disruption is a transformation that is caused by emerging digital technologies and business model. And this in turn is caused by structural shifts in consumer habits, such as the shift from offline to online. And as people begin to spend more time online, digitalization has become a necessity for businesses that wish to remain competitive in this new global backdrop. And to stay ahead of the competition, companies across all industries and sectors have been adopting digital solutions as an alternative source of revenue and also as a way to improve efficiency. So e-commerce is one good example of this. So compared to the past, many brick and mortar stores today are gradually turning towards e-commerce, which vastly broadens their reach. And in 2019, worldwide e-commerce sales hit a record high of 3.5 trillion US dollars, the majority of which came from China, which is currently the largest e-commerce market in the world. So over there, companies like Alibaba, JD, and Pinduoduo, they control about the majority of the e-commerce market. And if you look over to the West, the US is actually the second largest e-commerce market in the world. And over there, it is no surprise that Amazon is the largest player with a market share of over 50%. And the global e-commerce market is estimated to grow at a compound annual growth rate of about 17% over the next 3 years and reach a value of 6.5 trillion US dollars by the year 2023. So all in all, we think that as these megatrends begin to unfold, demand for digital products and services will rise, and so will the earnings of these companies. Now, how should you invest in the digital economy? So investors who do not have exposure but are keen to invest in the digital economy at this point in time, you may want to consider using a systematic investment plan before switching to a lump sum investment should the opportunity present itself. So this will ensure that you buy more units when prices are low and less units when prices are high, which will bring your weighted average cost down. And I think I've already mentioned this earlier, but our recommended product for exposure to the digital economy is actually the O-Shares Global Internet Giants ETF. So this ETF is US listed, and it's the ticker is OGIG. So this ETF is actually a rules-based ETF that is designed to provide investors with exposure to some of the largest global internet companies that derive most of their revenue from the digital economy. So companies that are included in this index, they must exhibit quality and growth factors. And in terms of country allocation, 61% of the companies inside this ETF are from the US, 21% from China, and the remainder from the rest of the world. And so moving on to some of the holdings of this ETF. So the top 10 holdings include the likes of many internet giants like Amazon, Tencent, Microsoft, so on and so forth. So overall, we think that this ETF is actually one of the best in the market for investors who are seeking exposure to the global digital economy. And since inception, OGIG has actually delivered returns of more than 100% across 2020 already. And with the structural tailwinds behind the digital economy, such as your rising internet adoption rates, as well as your widespread digital disruption, and also the fact that the world itself is becoming increasingly digitalized and tech-driven, we are confident that OGIG will continue to perform in the long run. And I think with that, I've come to the end of my presentation today. So I hope that through this session, you have been able to gain a better understanding of the digital economy, its prospects, and most importantly, why we are so positive on this sector. So once again, my name is Terchin. Thank you all for being here today, and I wish you all the best in your investment journey.
Thank you so much for your session, Dijin. We do have a couple of audience questions. Would you be open to responding to them?
Sure, let's take a few.
Okay. Can we have the questions, please? Yes.
Okay, so the question is, with excess money being printed in the US and mail order checks coming in, do you feel that there is a correction looming in the US index? So I think that it is no secret that valuations in the US, especially for some of the tech stocks, they are near all-time highs. But the thing is, as investors, we should always be forward-looking. And what I mean by that is, whenever we buy a stock, we don't buy it for the earnings that the company has already delivered in the past. We buy it for what the company can deliver in the future. That's what I mean by forward-looking. So even though valuations might seem a little high, if we stretch our horizon out a little further, perhaps 2 years, 3 years, or 5 years, if you can see that the earnings growth is actually substantial, and you will bring valuations a lot more reasonable. And so I think that unlike the past, like in 2008 or 2001, valuations are stretched. But at this point in time, this year, the higher valuations, the higher prices are actually supported by earnings growth. So, yeah, I think that the US index, the US companies, they should continue performing well. So the next question is, does the digital economy bring a large amount of volatility and uncertainty that would disrupt our portfolio? So I think the short answer to this question is yes, because like I've shown you earlier, inside this OGIG ETF, you have some of the largest tech companies, Meituan, Alibaba, Microsoft, Amazon, and some of these companies, they are known for very volatile price movements throughout the day. So you can expect to see some, if you include the digital economy inside your portfolio, you should expect to see higher volatility. However, I would like to remind investors to focus on the long-term growth story of the digital economy. And that is mainly driven by the fact that the world we live in today, it is becoming really increasingly digitalized. Every day we interact with technology from the moment we wake up and the moment we go to sleep. And for companies that are leaders in their own segments, we think that they will continue to do well as demand for their products and services is still robust.
Thank you again for answering those questions for us, Dijin.
You're welcome.